Welcome to XM.com for the Daily Market Comment by Mario Sachikiriakos. I'm Christina Marujos. Risk aversion made a comeback on Thursday as a flurry of alarming headlines led investors to cut their exposure to riskier assets in fear that the avalanche of stimulus globally may not be quite enough to keep the economy on a recovery track. Infections in the U.S. continue to accelerate, with a death rate on the rise too, sadly. In the political realm, Joe Biden, who will challenge Donald Trump in November's presidential election, turned up the populist rhetoric against Wall Street, saying that ending the era of shareholder capitalism is overdue. He also outlined his spending ambitions if elected, which amount to $700 billion that will be paid by reversing some of Trump's tax cut for corporations. Biden is leading Trump by 9 percentage points nationwide, according to averages of polls, so markets might begin to focus on what Biden's presidency means for corporate taxes and by extension for stock prices. The result was a classic case of risk aversion, with the S&P 500 closing roughly 0.6% lower in a volatile session and futures pointing to a similarly low open today. In the FX arena, the US dollar cruised higher as investors piled back into the reserve currency safety, mostly to the detriment of commodity currencies and the euro. The outlier in all this was the tech-heavy Nasdaq, which defied the downbeat mood to close at a new record high. The Nasdaq has been a major outperformer throughout this crisis due to its concentration of giant tech names with healthy balance sheets. In the bigger picture, for all the volatility and all the negative headlines lately, most charts have really gone nowhere over the past month. The S&P 500 has been trapped in a range since early June, as have most FX pairs that include the dollar, which has transformed into a safe haven. Coincidentally or not, that's almost exactly when the Fed's balance sheet stopped expanding, which is a sign that liquidity, not fundamental news, is the real driver of the market mood. This was today's Daily Market Comment at XM.com. Have a great weekend.